Stunned into silence tonight as they attempt to assess the damage of the most violent financial loss in modern times. The Dow Jones was blitzed for a single-day drop of 508 points. Volume, an unheard-of record, almost 605 million shares. The Toronto market plunged nearly 307 points. Volume also a record, more than 55 million shares being dumped by anxious investors. Selling began this morning in overseas markets with a vengeance. Sydney, Hong Kong, then Tokyo, all making very sharp drops. By the time London, England opened, prices were plunging to record lows. The New York market sunk 200 points within minutes of the opening bell. Today's loss exceeds the single-day drop of Black Friday. At that time, the Dow lost 12.8% of its value. Today, its losses approach 23%. Just 2 months ago, the Dow Jones hit its 55th record high of the year when it moved over the 2,700 mark. Tonight, it closed at 1738, below its opening level of 1987. The TSE had a 1987 high of more than 4,100. Tonight, it's down to just below 3,300.
Well, it's always difficult to predict market bottoms. It's sort of like predicting the weather 2 weeks out from now. But I would expect that the worst is over as far as the market decline, and what we are now is within 10% of the bottom.
Selling began in earnest last Wednesday when traders were disappointed with the latest American trade figures. They were better, but failed to improve fast enough to satisfy the professionals. Veteran market traders like Carl Christie claim they've never seen anything like it in their lifetime.
Obviously, these numbers are staggering. We've never seen anything like this before in the history of the market, certainly not in my 27 years in the investment business. And I have confidence, although we've been looking for a shakeout for the last 2 or 3 weeks in the market, it's been predicted. I think that possibly everyone has been sitting in the wings and looking for some signal. Obviously, it started last Thursday and carried through till Friday, and now this is sort of the culmination of that panic selling. I like to think that the institutions are sitting back in the wings, wringing their hands, waiting for a buying opportunity, and I think that if it's ever arrived, it'll be now.
Professional investors insist that the economy is fundamentally sound. Even though interest rates have been moving higher, they are not nearly at damaging levels. So they feel fundamentally at a loss to explain the steepness of today's plunge. What is different this time around is the close links that all world centers have with each other. That has been much of the benefit of the spectacular gain in stocks in the past 5 years. And today it clearly demonstrated the other side when the mood turns negative all over the world. Arthur Vail, CFTO News.